Right. We all remember this chart a while back. That was, I believe, in March. Yes, that was in March. This is the daily chart for Bitcoin. We're having, of course, a some kind of a topping formation. We're having double heads, very strong double heads, and the shoulder. These two very strong double heads, and the shoulder. This market was doing a wave 4C. We had a 4A here. This is again a daily chart. We had a 4B. The segregations at that time were correct, and we were expecting to do a 4C that would bounce at any of these internal level ones. We have high degree level one here at $70. The current market is, I believe, doing, something like 80. Let's check price first. We're doing 83 or $84 to be exact. Okay, so we were still about to do a 4C that would probably bounce at $70 before we get another shoulder like this shoulder here on the left, equating another shoulder on the right, would mean that we're going to be attacking levels as high as $140 as shown here. All right, so let's take this forward. Very little action since then, actually, even though we have a meltdown with most of the cryptos. We're looking at the same chart. This is the same daily chart today, taken today. All right, we are about to test that level at $70.60. Because of the negative momentum that we're having, we expect that we're really going to be even going to lower levels. We have these internal level ones outlined here. There's one running at $58.36. There's another running at something like $48, that internal dotted white line. All right, so we're probably going to be seeing one of these by the end of the week or by the end of the current correction that's going on in the crypto class. Let's take a look at the segregations exactly of that current move. Remember, this is going to be a 4C. The same label is 4C. There has been a 4A earlier, and of course a 4B did something like a market top that is lower than the last head. Now that 4C must be a 5-wave structure like OC, so it already does segregate into a 1 and a 2. There's an internal 1 and an internal 2 here. As of that point on, the market is moving in a wedge. After that internal 2, we had an internal 3, then we had a 4, then we had an internal 5. This marks higher degree 3, equating with higher degree 1 here. Below that, higher degree level 2, you can see we have higher degree level 1 here. And this wave 3 equates with it. Now we're having a wave 4, and we've already had a wave 4. We're now doing level 5 or wave 5, the final leg of that correction in order to complete a 4C. So if we're going to have a 5-wave structure into C, we would expect that we are really doing a count of an A here and a B and then a C. A here ends with that level 1 at the neckline. There's a wave B here, there's a wave C here, there's a wave D here, and there is going to be a wave E here, which will mark that of that 4C. Notable also that the last leg between level 4 and 5 should count into 5 waves. We only just done 3, so we get a correction that should reject at that moving average, showing you in green. And then we'll get another wave 5. Probably that's going to be the end of that correction. That's the one that should take us to break below $70, probably take us to $58 and even maybe $48.